Welcome back to another episode of Stake Podcast. This podcast, I interview well-known Decred community member Ammar Naseer. Ammar is probably best known for his many Decred writings. Some of his most known articles are Decred and Economic Breakthrough, Building a Transparent Future with Decred, and Why We Need Decred, an Inclusive Approach to Sound Money. Many of you guys know Ammar from Twitter at Ammar Uni, OONI, on Twitter. And this interview, we got to know the man a little bit behind the thumbnail and dive a little bit into some of Ammar's background and how he found Decred and what he thinks is interesting about Decred and how he sees the project evolving over time and Decred's role in society, but also within the crypto ecosystem in particular. You guys are really going to enjoy this episode. Took a lot of community questions and was very thankful that Ammar took so much of his time to answer everyone's questions. We get into things like mining. We get into things like biotechnology, alternative energy. And we talk about macro landscape as a whole and answer the question, is this the end of macro? So a lot of good stuff in here, guys. I think you're really going to like it. Want to make sure that unfortunately, I do not have my son with me for the beginning of this video, but want to make sure I'm directing everyone on the podcast to the YouTube channel. Trying to get to 100 subscribers so that we can reserve the YouTube URL. So go ahead, head over to YouTube, type in Stake Podcast, or it'll be in the description below. And go ahead and give us a subscribe. But let's get into the Decred Block Explorer data. We're at proposed block 515,473. The current ticket Decred price is 168.9 Decred, with the voting rewards being 0.81 and 53.47% of the circulating supply of Decred is locked in tickets right now. The hash rate of Decred is sitting at a very respectable 292 petahashes per second. And we're just moving right along. Oh, of course, how could I forget? The exchange rate is $36.14, which is down from a local high of $40. Been seeing some very, very nice price action in Decred, and it's a great time to be a cred head. And with that, I want to just remind everyone to make sure, if you have it within your means, to leave a donation. Even 0.1 DCR goes a very long ways. So the donation address is in the description. And if it is not within your means, just enjoy the episode. And I know you guys are going to get a tremendous amount of value from this. I did. And thank you for listening to Staked Podcast. Stay staked, dorks. All right, and we're getting started. I have with me Ammar, and Ammar, we're going to jump right into it. Everyone knows who you are in the Decred community. Prolific writer, a great thinker. I've learned a tremendous amount from your writings and kind of want to get to know the man behind the writing a little bit. Where were you in when the Raptors won the 2019 championship? Tell me about that day.
Oh my God, I was at home. I couldn't really sleep that night, to be very honest with you. And then the next morning, so basically all across Toronto, it was just craziness. People just like out in the streets, just partying all night. I had to go into work the next day. We had people that obviously did not show up to work, and everybody understood why. So it was a great moment for myself. I think for all of Toronto. The first time the Raptors won the championship. So that's about the championship. All of last season. Again, there was a parade as well. More than 1 million people just lined up in the streets of Toronto. Just an open party all day, all night. So that was a phenomenal experience. And again, I probably should start by saying, thanks for having me on. I appreciate the kind words to get started, and I'm happy to be here.
No, it truly is an honor. And who would have thought, going from 2019, we would move so quickly into what has quickly become one of the craziest years of my life, 2020. This podcast is probably going to be the last one I release in the year 2020. I want to end on a high note. What's been the best thing about 2020 for you?
It's a great way to think. I appreciate that. Probably just the ability to have some downtime to read and learn a lot more has been singularly the most enriching experience for myself. I mean, couldn't travel as much, couldn't do much elsewhere, but I think just the ability to slow down time and actually think not just short-term horizons, but longer-term horizons has been the most enriching experience for myself.
What have you been reading as of recent? Any titles you want to drop or any articles in particular?
It sounds crazy, but I find Twitter is, if you follow the right people, they will post some amazing articles. Believe it or not, I'm not a huge long form book reader. I love shorter form. Like, I'd say probably about, like, I have an attention span of, I'd say, within a week if I can get something done. That's sort of like the attention span for reading for myself. So I think I just use, honestly, Twitter as a means to get started and just go. And just podcast binging has been kind of the other part that I've been doing. I'm sure a lot of people do that this year as well.
Definitely. And yeah, Twitter has been an amazing place. How we connected, and like you said, if you're using it right, you can get access to some of the greatest minds.
Actually, Balaji Srinivasan, he's got a quote about Twitter. He says, he's like, it's the world's best library, but there's also a civil war going on in the background. So if you can curate the right folks, you've got the world's best library across any topic. I mean, monetary economics and crypto and technology in general have, are sort of the areas that I focus, but that's in general, it's greatly enriching.
I know this is kind of on the spot, but like, who are some hidden gems that people might not know? I mean, checkmate, shout out checkmate, Permeable Nino, shout out Permeable. But who are some other people that people in the Decred community might be interested in knowing about in any topic, not just crypto?
Oh man, I think obviously checkmate, Permeable Nino, those are like amazing guys. Zubair Zia is another guy. He's a local guy. He's from Toronto. He actually lives like not too far from me. He's a good friend of mine. I think he's a really hidden gem. I think that's just probably from a Decred community. I'd recommend him as a shout out.
Definitely, shout out Zuba. I need to hopefully try to get him on Stake Podcast. Maybe this will be the catalyst. I want to know a little bit more about you, your background. I know you went to Harvard. I know you live in Toronto, but tell me a little bit about the Genesis story. Was there things in your past that would have, led you to predict that you would be where you are today in terms of your interest? And yeah, maybe just give us a little bit of that.
For sure. Yeah, I do live in Toronto. I did have the pleasure of going to Harvard for my master's. I specifically, I think something that may be interesting for folks is, I deliberated a long time between doing like a traditional MBA and a master's of liberal arts. I think one of the key reasons why I am so passionate about crypto and topics like DAOs and decentralization of money, the interdisciplinary nature, is because of the fact that I went to school for a master's of liberal arts, which focuses on a multidisciplinary education set. So I think that was a key part. Another key part of my upbringing was actually immigrating. So my family originally from Asia, from South Asia. I moved around quite a bit, in early years. Then we immigrated to Canada. So I think just the worldly difference actually helped me kind of understand. Oftentimes I'm still connected to my cousins through through WhatsApp and things like that. The world that they live in, the world that we live in, I think it's quite different in many ways, but that helps. Having travel experience actually really helps. I've been fortunate enough to travel to 5 different continents. I had a goal of traveling to all 7 before I turned 30. Obviously, I did not hit that, but I did 5, which was pretty good. Australia is the next one on my list. I think I gotta get to that as soon as this pandemic thing is done.
So Australia and Antarctica, is that what's left?
You got it.
Yeah,
Antarctica is like one of those, you get old, there's not much to do there. There's no life there. I think there's like a satellite there that people see. I've got some friends that have actually traveled there and they just see that and come back. It's a bucket list item for your own ego more than anything.
For sure. Yeah, no, I mean, 5 continents, that's quite a bit. That's a lot of the world. It's interesting because, I'm from small town Oklahoma. Humble means my dad was enlisted in the military here. My mom was a nurse, but fortunately, because of the military, I had the privilege to travel around a little bit and see some of the world. And
I personally, I feel like it's because of those experiences that I had, I guess, a little bit more of a foresight, or at least could understanding of how things like Decred and Bitcoin could impact the world, right? Compared to someone who hasn't traveled. Um, what are your thoughts about, sort of international, like being cosmopolitan, international minded, and being able to, in its relation to cryptocurrencies?
For sure. I think it helps a lot. It really, really helps because the use cases for cryptocurrency adoption will greatly differ by the region that you're in. In fact, for like North America, for example, we don't have, or like any developed country, we don't have where we have like stable currencies. We don't see the immediate need for like a non-sovereign store of value. However, if you talk to somebody in Africa, you talk to somebody in other parts of the world, Venezuela, you talk to somebody in Iran who have sanctions, who have crippling inflation, hyperinflation rates, who don't have the trust in their central governments. To them, it makes a lot more sense. So having that perspective is really, really helpful. In particular, when you think about something like in Africa, I think Africa is super interesting because of the fact that when you look at uh, countries within Africa, like Nigeria, for example, which have uh, the holy trinity of like young population, high internet penetration, and low trust in central governments, or actually low trust in their own currencies. That is basically the holy grail of where cryptocurrency adoption, Bitcoin adoption could come from. So you looked at Nigeria, or you look at Africa over the last sort of 2 decades, they actually bypass the need to build all like bank branches and physical branch networks in terms of building a financial system. They skipped all of that. They went straight to mobile payments. And so in some ways now they can skip building the next level of infrastructure and go all the way straight to cryptocurrency as well. So that's where, if you understand parts of the world which have the most incentive to move into cryptocurrencies, you'll understand them a lot more. You'll understand, the concept of digitization of money a lot more. You'll understand privacy a lot more if you're coming from an authoritarian state. If you're coming from like a state where, for example, uh, if your religious beliefs, your sexual beliefs are a certain way, if you don't have financial privacy, and that can reveal certain actions, you could be punished. So actions like privacy become quite important for that, and so we don't always see it right away. Why that might be important as a value proposition, to have shielded privacy from the nation state. We're fortunate to not have to worry about that right now. However, that is a real life use case, and that's one of the key things why privacy is going to be one of the biggest topics of conversation in digital assets over the next few decades, or the next few years.
Yeah, and one of your articles that I'm trying to remember the title of it, you talked about sort of some of the implications of privacy with social media. What does the future of social media look like to you? Like if you play this out 30, 40 years, given the concerns you raise, and I'm trying to think of the title of the article. Actually, I'm just going to pull it up real quick. Remembrance in a Digital World, Moving Beyond Physical Cash and Coins. Yeah, but so the question is, what does the future of social media look like to you?
Yes, it's probably worth recapping what that. It was a mini
Absolutely.
write up of what it was about. So this happens to do with Remembrance Day, a couple of 2 years ago, or actually 2019 Remembrance Day. So traditionally in Remembrance Day, what we do is we honor our fallen troops, especially war veterans over the last the Great War, by wearing poppies, and primarily the biggest means to raise money for these poppy badges is it's traditionally been like you donate your coins, your spare change towards that, and that goes and actually helps veterans causes. What happened in 2019 was people don't have cash as much anymore. And that's not just in Canada; that's across the world. People don't have as many coins. So the distribution network for raising for fundraising for veterans via coins and physical cash, it ran into a digitization problem where people would just no longer donate towards that. So we really saw, and people started to say, what is the cause? Some people actually here, there were some people that actually blamed immigrants, for example, that said, immigrants are not donating towards, veterans causes. And what that article basically talked about was the root cause is not so much, people's fault of any culture per se, but more so just the fact that the distribution for, you know, how you fundraise, how you raise money, distribute money needs to be kept up to a digital age. And so, you know, my thoughts there was, you know, we need to be able to, in particular, the social media reference there was, you know, social media has a role to play where, you know, if you think of something like a Twitter or Facebook, right now we all have like those verified icons, or, you know, humans in general have always worn badges on our physical bodies throughout history, right? You go back all the way, you know, people have always worn some sort of jewelry, some type of ornaments to adore themselves. If we have digital versions of our identities, wouldn't it be great? And I think it will obviously be, it's a clear use case where social media companies, where you have profiles, instead of just showing like a verified check mark, you could have, you know, you could donate towards a good cause, and that would give you a certain badge, a badge of good honor, if you will. And that is a way of reframing, you know, just beyond like a social symbol of being verified on social media, to actually use these platforms for a means of good. And obviously we'll see, you talked about, you know, how this plays out over the longer term. We're going to see, you know, social media and money kind of blend into one network, right? So, you know, it's going to be very easy to create, you know, sub new networks within social media. You know, if you have what, 8 billion people in the world, all on Facebook or all on Twitter, it's just too difficult to scale that. So there's going to be like sub communities where we're actually going to see people, you know, have certain badges. They'll house, like Facebook groups is like a predecessor to what we're actually going to see. And we're actually going to see people have like economic coordination being done without being physically connected. In some ways, you could say, you know, we're going to see some version of DAOs being created, which there's a great research paper that was published by the Bank of International Settlements. It talked about the concept of digital currency areas or digital currency networks forming within social networks. So you can almost have people joining, forming capital, allocating capital towards certain causes, certain shared beliefs. And so that is going to become sort of like a new version of social media.
That's really interesting. I definitely want to later on talk about sort of DAOs and some of your thinking about DAOs. But before we do that, and first I want to note for all the listeners, all of Ammar's writings that I mentioned in this podcast will be linked in the description. So check those out. The first writing, before you had that little mini write up, which thank you for entertaining my question about the future of social media. I want to jump in now to, you know, digital assets, cryptocurrencies, Decred. Your first article was the problems that cryptocurrency solve, and let's not hammer that, but there was basically 6 different things. I'll run through those: currency debasement, foreign exchange, inefficiencies in transfers, limited divisibility, theory of confiscation, threat of confiscation, and the globally unbanked. And your next article was Decred, an alternative contender. That was in 2019 when you wrote that article, and we are coming to the end of 2020. Where does Decred stand as an alternative contender today, and what is the answer to why Decred?
Oh wow, that's we got, how much time we got? I mean, so I could go on for hours, but essentially, so two key things. The first one, the article that you mentioned, is you know, just thinking through, because I kind of got tired of explaining to my friends and family like why cryptocurrencies are needed. So that was a very agnostic sort of non asset specific kind of an explanation to say, you know, why like a digital asset would be what are the use cases for there. So the things that you mentioned, that the ability to, you know, have a highly divisible transaction where money doesn't have to be just like a full dollar. You could actually go into like a you know, a fraction of a unit. That actually is fundamentally different paradigm. The idea of, you know, privacy there, the idea of threat of asset confiscation, completely different paradigm than what we're in. You know, the idea of thinking through, you know, changing settlement networks that the banks operate internally currently right now, changing it to like a blockchain based settlement network, completely different paradigm from the world that we live in right now. Thinking through inflation just as a concept. What is inflation? You know, how we could potentially change, you know, rather than having our savings in our local currencies, having it in a different currency that, you know, is concept of a fixed supply is not something that people have necessarily grown up thinking about. So just explaining those were key tenets of that article. It was, again, pretty agnostic of any particular asset, so that people could just think about the asset space before they get into any one particular asset. To your question about why Decred, there's quite a few reasons. The first biggest one is, we start with, understanding, why Bitcoin. Decred is a natural extension of that. So why Bitcoin is because we are living in a time where money is being digitized in front of our eyes, and we're also living at a time where we're actually going to see hyperinflation or threats of hyperinflation realizing. And actually, the smartest minds in the financial space have all started to realize that. So digital money that is not tied to any one particular central government, that provides inflation protection. That is like a key kind of tenet for the thesis behind Bitcoin. And there's actually more properties around it that actually liken it to a digital gold. And actually gold, people talk about that as a store of value because it's just quite easy to make an analogy to that, to Bitcoin. But really the use case is a store of value. A digital store of value is really the concept that we're trying to solve. The market for digital stores of value is something that is the total addressable market. Is not there's no ceiling that we currently have. I think anybody would probably agree to that. We try to make analogies to gold just because that's the easiest understanding of the current framework that we live in, the 8 trillion kind of analogy that people use. In terms of stores of values, you've obviously got 100 trillion plus store of value market in bonds. You've got 100 trillion plus store of value asset in real estate. Those assets, the reason those assets are so highly inflated right now in terms of their value is primarily because people need to move out of cash, right? So cash, this is tied to the inflationary nature of currencies because of the virtue of the fact that if you hold cash, if you hold all your savings, especially if you're an institutional investor, if you're a pension fund, if you have access to only exposure to only cash, you will lose purchasing power. You need to move out and move towards an asset that provides a stable purchasing power, preserves its purchasing power, preserves it specifically against inflation in particular. So the bond market, 128 trillion, that's really like a much bigger market from a store of value perspective that really we should be looking at from a Bitcoin. That puts us, if you look at like a gold as an analogy, from like 400 billion that we're at in Bitcoin to like 8 trillion, it's what, like 20x. But if you look at 128 trillion, that's like that's the real store of value asset that we're going to be looking at. And the bond market currently is the reality is, bonds are paying nothing right now, right? Sovereign bonds are paying nothing, to 0%, and they're denominated in currencies which are subject to monetary debasement themselves. So the paradigm of investing like a 60-40 portfolio, where you put 60% of your assets in like a fixed income store of value, like a bond, and 40% in equities, that's going to change, obviously. And so where will that money go? That'll go towards brand new stores of value, Bitcoin being the brand new, obviously the leader of the pack. Then we get into, okay, Bitcoin itself, is that the only store of value that will emerge? What are some of the things that Bitcoin clearly does not solve for? So one of the things that we can be clear is, Bitcoin is an amazing store of value, but its design specifically doesn't solve for things like governance. It specifically does not call for solutions, a clear path to things like privacy. So if there are other assets that can provide, it doesn't provide any yield, it doesn't provide any governance rights. So if there are assets that can provide both a protection against inflation, but also a voice, also yield, also privacy as a feature of a store of value, that's quite interesting. You look at the Swiss banking industry, you look at kind of like the offshore banking industry, it's a $30 trillion industry, and privacy is a deep part of that industry. So people talk about store of value and privacy being kind of deeply intertwined with each other. You don't want people to know exactly, if you do one transaction, I shouldn't be able to tell, what your total net worth is in a particular asset. So privacy is a fundamental part of having a store of value when you transact with somebody. So Decred solves for a store of value. It also provides yield. It provides a voice. It provides privacy. And over time, what you will also see is, we've already got a DEX that is about to come live. It's already live, but it's going to be massively usable in 2021. A decentralized exchange. What Decred then becomes is this not just a currency, but this application layer that can sit on top of Ethereum. It can provide, the governance, binding governance as a chain to Ethereum based assets which don't have governance. It could be essentially Decred as a collateral, which is interoperable with various dApps in the Ethereum ecosystem. So Decred is basically additive as an asset to all of the Ethereum network. Then you've also got Decred potentially as a governance layer in some ways, even on Bitcoin in some ways, because you could think of, Bitcoin denominated DAOs, for example, that will need some kind of governance rights, and Bitcoin Decred can be that particular asset layer, the innovation layer that sits on top of the other protocols. So I think there are various reasons, but the key thing is Decred is more than a cryptocurrency. Decred is an ecosystem. It's bootstrapping a digital first economy. It's got an asset DCR, it's got privacy, it's got yield, it's got governance, it's got a decentralized exchange, it's got a treasury, which can actually be tapped into to make and add to a brand new economy, a digital native economy of the future.
In terms of bootstrapping, the network, the currency, on the social layer, you talk about Decred is sound money with a voice, is the quote, and you've mentioned it a number of times just now. Can you talk about the idea of, on navigating the social layer of trying to bootstrap money and how Decred competes, compared to other cryptocurrencies and on these new dimensions?
Yeah, I think one of the key things that's different with Decred, one of the really good things with Decred is it does the governance layer first from a social perspective, and then it delivers like the actual enhancements. And the key reason why that's important from a social scalability is that you don't have problems with hard forks. You don't have problems with people kind of having competing visions of which one is the real Bitcoin or the right version of a particular asset. So people, if there's any enhancements that are needed, Decred provides the ability to say, instead of building something first and then doing an asset upgrade or actually talking through whether it's the right version to do, it actually flips it around and actually asks people first in a binding way to actually say, using Politeia as a governance network, you can actually ask people and then say, what is the right thing to do, whether it's investing in privacy, whether it's investing in any particular feature. People have, once they have agreed upon, stakeholders with real skin in the game who will be used to upgrade sort of the Decred blockchain, they are actually all along there with the voice by having participation, giving input into what the right sort of next steps in terms of growth are. That and then you use a treasury towards allocating and actually building out the features, then you do another sort of consensus upgrade afterwards. So as opposed to actually building something first and actually who builds the right version, there are questions about centralization. Like, are there people who are secretly building things? Are they building versions or features that are not going to be accepted by the community? You essentially eliminate all of those contentious issues by placing the governance and actually the holders of the currency right up front and actually asking them what the right thing to do is. So Decred will build whatever the right thing that Decred holders want to build is.
Cryptocurrencies, money, world reserve, asset. Are all of these a zero-sum game?
No, I think they're additive in many ways. In some ways, yes, these will eat features of traditional money. However, the overall sum of the net worth of the pie, if you will, it's actually additive. So we'll still need, for example, gold we'll still need gold as a jewelry. We'll still need gold as an atomic metal. So there's still value there. When you look at real estate as an asset, people still need to live in places. So what we have not yet had in the past are, digital versions of, non-sovereign stores of value. So these are like additive areas which actually literally did not exist before. So they do compete from currencies against traditional instruments from like a store of value perspective. However, they're additive in brand new ways. And specifically, as you look at brand new ways of, these are really ways to coordinate value which didn't exist using the internet, right? So when you looked at something like Instagram, which was giving away, just as an example, like photo sharing for free, that was additive to like the photo sharing industry. It ate away a lot of like the Kodaks of the world in terms of market share, but it really, it made photo sharing more accessible. We actually are better off as a society because of the proliferation of free and open source software. And these digital stores of value are free and open source software that are going to provide us ways of capital formation, capital coordination that did not exist before.
I like that a lot. What are the implications when/if Decred overtakes Bitcoin for cost of double spending?
Oh man, how many trolls are we gonna get because of this question? I love this question. It's so I think both Checkmate and Zubair Zia have done a lot of great work on this. One of the key things that people talk about double spend is actually censorship as a means, right? So once you've crossed certain blockchains in terms of double spend, you become a more trustworthy ledger. Once you have become a trustworthy ledger, how much value can you put on trust? There is no central party to actually provide you a refund when you put an asset on a blockchain. What you are trusting is the strength of an append-only ledger. The append-only ledger is a key part. You want that ledger not to be at all, forgeable or changeable in any ways. Decred, based on its hybrid consensus mechanism, it only needs a fraction. We're a long way away from that fraction of reaching that, whatever, 5 to 10%, depending on the calculations, fraction of the overall market cap for Bitcoin. But that is the single biggest asymmetric bet that you can make in terms of value accrual. I think in terms of memes, in terms of the trust of the market for putting their hard-earned money on a particular decentralized asset, the strength and the tamper-proofness of a blockchain ledger is, along with scarcity, is probably the two biggest reasons that you would actually use that. So Decred and Bitcoin both have like the 21 million meme. I think once you've crossed a certain threshold, the amount of repricing that will happen is, I don't think people realize. I don't want to put a number in, but it's going to be phenomenal, the amount of asset repricing that we're about to see in that.
I couldn't agree more. We don't have too much time left. I want to be very cautious of our time, and I want to make sure we leave plenty of time for the audience questions. So one more selfish question, and then we'll turn it over to Twitter. I believe it was the Decred an Alternative Contender article. It might have been one of the others, but you sort of do this comparison of the tokenomic models of Bitcoin, Decred, and Ethereum. What do you not like about Ethereum's tokenomics model? This is also going to bring out the trolls.
Well, first of all, I should start by saying I really like Ethereum, which is different from ETH as an asset. So Ethereum as an innovation is, phenomenal, right? Smart contracts as innovation, decentralized applications are phenomenal. That doesn't necessarily translate into ETH as an asset. And what I don't like necessarily is ETH, and specifically, we talked about inflation protection and a good blockchain consensus mechanism. I don't know that ETH has solved for either one of those. And the third being, I don't know that ETH is really needed for a lot of the applications on Ethereum. Ethereum was in some ways my first love when I first got into crypto. However, the more and more you realize, people are not necessarily going to need ETH as an asset. I think maybe one good way to encapsulate this is when you look at general purpose technology. So I would highly encourage people to look at the term general purpose technology. Basically, these are like brand new technologies that enable other things to be built on top. Like electricity, it was a general purpose technology, which eventually allowed like windmills and steam engines to be built on top, which eventually allowed the brand new industrial revolution. But you don't necessarily need the inventor of the electricity doesn't necessarily get all the value. So ETH in some ways is similar to that. It's a great general purpose. If the Ethereum blockchain is a great general purpose technology. However, the token accrual model, you don't necessarily need ETH as an application in the Ethereum ecosystem in terms of all the values. We also have not seen a credible monetary policy for ETH. Those two reasons are probably the two biggest why I am not the most bullish on Ethereum as an asset, even though I think people way smarter than me have said Ethereum is like much bullish from here, and longer term, yeah, it's going to be valued much higher than where we're at right now in 2020. But this is just about value accrual purely in terms of being a finite amount of assets. If you have to invest, is Ethereum the asset that you're going to invest that value in? No, I think a pure store of value asset is going to accrue higher value. That's why I probably put more money on like something like a Bitcoin and Decred.
Thank you for that answer. We're going to turn it over now to the audience questions. This one comes from Oliver, and I'm going to try to ask these in an order that makes sense. One Time Warp asks, what do Ethereans plus Bitcoiners underappreciate about Decred? And Checkmate responded, the moron proof use case explanation. I don't know if he's asking you to do that or if he was just trolling, but yeah, that's the question.
Thank you for the question, Oliver, and I appreciate that check. I'll try to give an answer to that. So basically, the single biggest thing that people don't appreciate yet is that Decred is in many ways additive to both Bitcoin and to Ethereum. In particular, Decred solves for things that are not being solved for by Bitcoin. Things like governance as a layer, as part of the store of value, and it also solves for governance as a store of value, which could provide as a compatible asset to the Ethereum ecosystem. So particularly, I think I understand, it doesn't have a high market cap today. But that's also where the alpha is there to be made. I saw Dan Held, who's a Bitcoin maximalist. He tweeted, people, if you could go back in time and actually, buy Bitcoin at $10, if you tried to tell your friends, they would probably laugh at you, or they would not buy Bitcoin. So Decred is in some ways, similar to that. People don't appreciate it yet because of the early nature of things. I really do believe, we're in like 2013, 2014 version of Bitcoin. So there's going to be a need for decentralized coordination, and decentralized coordination and governance are actually tied together inherently. So when you talk about coordination, people want to be able to have a means of dispute resolution, and Decred provides a means of dispute resolution in an asset that is provably scarce, and for which the use cases will continue to grow, with the upcoming DEX being the primary use case, which is additive to both Bitcoin and to Ethereum. I hope that makes sense.
No, that made perfect sense. This question comes from Checkmate. What happens after the 30-year bull market and bonds comes to a close? Do you believe we are at the death of macro phase? And if so, what comes next?
Thanks, Jack. Death of macro. I think I saw Raoul Paul use that framing. So I think it's probably important to mention why people say like death of macro. Traditionally, macro investors have looked at things like the bond market, interest rates, foreign exchange as a means of investing. So when we talk about like the death of macro, what we're talking about is not so much the death of macro investing as a whole, but maybe just the moving to a new era of new frameworks where we don't think bonds, interest rates and foreign exchange are the means of driving macro investing. Macro investing is as a theme, it looks at generally like social changes, macroeconomic changes, which will continue to occur even beyond just certain financial assets. So you look at something like I'll give you an example: Brexit. Brexit was a macro social political event. Smart investors went short GBP, went long gold. So assets, so events like wars, events like certain social themes are going to continue to happen. They may not necessarily be captured in terms of assets in the bond market. What we're going to see next is actually really probably, if I were to say, what are the best ways to pivot if you're not going to look at interest rates, is to look at more thematic based investings. And the best themes that you look forward to are, things like the digitization of money, the denationalization of money, green energy, biotech. These are, where thematically you're going to see the greatest alpha being made.
That was a tremendously valuable. This question comes from the first guest we actually had on Stake Podcast. So a very special person here at Stake. Shout out Pavel Svitek. Pavel asks, besides crypto, what is your investment strategy for the next decade or two?
Hey, Pavel. He's a good friend of mine too. So I have a finite amount of assets. So I do know where my lane is. I do know, if I have to generate returns, I want to put my bets on the fastest horse. In my opinion, that bet of asymmetric bets does come from cryptocurrencies. It does come from the concept of the digitization of money, the denationalization of money, and a brand new asset which did not exist before, which is primarily digital assets. In addition to crypto, to your question though, what are the best investment strategies? I think probably green energy, biotech are probably the two single biggest ones that you could think of as just as investment strategies. And again, it's there's going to be within green energy, you can look at solar, you can look at different types of alternative forms of energy. I'd probably go short on commodities like oil as an investment strategy, but my personal view is I stick to crypto. That is the single biggest source of alpha for myself. Beyond crypto, though, areas like green energy, some of the smartest investors I know that I follow, they go into that. Biotech, and if you're not an expert into either green energy or biotech, you can just get exposure through ETFs. That's sort of my simple mind that I do, is I go after ETFs where in industries which I don't have expertise in, and we have the fortune to be living at a time where there are smart people that will actually do the sort of like investing for you if you can just buy into a basket. And I think use ETFs as a means to go into green energy and biotech and buy and hold. You're good to go.
I mean, selfish question here, and sorry if this is too personal, but can you recommend an ETF that I can go look at if I was one to think about starting to allocate money to either of those spaces? Is there an ETF in particular? I know this is not investment advice. This is literally, I just want to know which one I should start looking at. But if you don't feel comfortable, you can just say pass.
Look at, again, not investment advice, but look at BIB as a ticker, pro shares. I think it's biotech. I think it's like it goes as a bull market towards it's an exposure towards the biotech industry. BIB is a ticker. Look further into it. Do your own research, but research BIB is what I'd say.
For sure. We got 10 minutes left before I'm going to let you go. So I'm going to try to rapid fire these last ones. And guys, if we're not able to get to all of them, I'm very, very sorry. Bochinchero asks, thoughts on emerging markets given the beating they've had over the past years. Also, gold miners as a leverage play on commodity? Question mark.
Good questions. Good questions. They're both different questions. So I'll probably go through both. So you're right. Emerging markets over the last decade did not perform the way I think most people thought. But in particular in China, like people thought the BRIC countries would continue to perform or grow the way they did in the first decade of the 21st century, and then they did not. So I think as you look forward from an emerging markets perspective, commodities are, you'd probably go bearish, in particular, like, oil. You could go bearish on that. So any countries, like, whether it's Russia or others that actually can have high exposure to oil, you'd probably go bearish on them. China still probably has a high amount of interest. In my opinion, there's just the amount of growth there is it may not be percentage wise, relative to what it was 30 years ago, but I think China is probably the most interesting. The second question there, what was the second question again?
You kind of answered it. It was gold miners as a leverage play on the commodity. That was the second question. Yeah. So gold miners as a leverage play on the commodity? Question mark.
Yeah. It's an interesting question. In particular, there's probably two areas of gold miners. So I think probably one maybe interesting thing before I get into specifics is what we're likely to see is precious metals miners actually diversify and go into crypto. So I've heard that from two sources at least that are quite plugged in, much more plugged in than I am in the sense. So I think that will be an interesting theme that goes out is, as if mining and capex is sort of their specialty, to take capex and actually put it towards mining an asset, you're actually going to see traditional people who are mining gold diversify into new assets. In terms of, and then there's probably two that stand out there in terms of notable ones that are actually got exposure to that use that mining as a means of actually larger exposure. Barrick Gold, like gold as a ticker, is probably the most famous. The second one is like Franco Nevada, FNV is a ticker. So they are, FNV in particular is like pretty diversified. They go beyond gold as well. They go into silver. They go into other types of precious metals. I think silver as a whole is going to be, exposure to silver, in my opinion, is very, very favorable. Primarily because you look at silver, and 60% of the demand for silver is actually industrial applications. It's not traditional like store of value type play. So and the industrial applications for silver actually are highly compatible as an ingredient into like a greener economy, into greener investments. So whether you're looking at like self-driving cars, whether you're looking at solar panels, silver is a high ingredient. So exposure into silver is actually quite profitable, in my opinion, the next decade.
Thank you for that. This question I'm really excited for, just because it's a name I haven't seen. This one comes from Dr. Bitcoin. We'll just ask the first one and then we'll move on to other people's questions. And if we have time, we'll circle back. How do you see the American regulators reacting to this upcoming bull run? And what could be the fallout of trying to maintain world reserve currency status versus a digital economy?
Yeah, it's fair. And I'm happy to kind of loop back and actually let's go through the other questions too. If people have taken the time, I'd love to actually get through, questions. I respect that.
Thank you.
Yeah, for sure. Probably the single biggest thing is, regulators have come out and actually said in the US, they're not looking to ban Bitcoin. Just understand that fact. The US is not looking to ban Bitcoin. The regulators, people who are in the treasury itself, like, the head of the OCC, Brian Brooks, he's essentially the currency controller in the treasury department in the US. He's a former Coinbase guy. So Brian Brooks, people, within the treasuries, the Federal Reserve themselves have actually said they're not looking to ban Bitcoin. So once you understand that Bitcoin is not going away, I can't speak about all assets, but specifically starting with Bitcoin, if supply is fixed, demand is growing, and it is not being banned anytime soon, yeah, that's very, very bullish for Bitcoin. People don't understand, in the 90s, people didn't understand the internet was not going away. It was like in the early 90s, especially, internet was like a weird concept. But by the time the 2000s rolled, people knew the internet was not going away. So we are at a point where Bitcoin is actually not going away. Just realize that. In terms of trying to maintain reserve currency and what are the things that people might do, other countries, what they specifically will probably try to do is like regulate centralized exchanges, and especially you'll see more KYC laws, more just high regulation of the amounts that you can do. People are trying to regulate. For example, there's new FinCEN proposed regulation that would try to put limits on KYC requirements on certain transactions over like $3,000. We're highly likely to see that. We're not going to see people trying to ban Bitcoin in particular. In fact, in my opinion, I read this somewhere. The most important thing a country could do to try to support Bitcoin is to try to adopt like a Bitcoin standard formally. The second most important thing that you could do is actually try to overtly ban Bitcoin, because when a country will try to ban Bitcoin and fail, that's when people will really realize and say, okay, this thing is not going away. This thing has a market. So banning Bitcoin, ironically, will be or trying an attempt to try to ban Bitcoin will ironically lead to a big shock. First, for people to say it's not going away. Secondly, a second order effect of that will be a growth in demand.
I completely agree. Dr. Bitcoin, again, he asks, how do you see the role of government and policies when they don't have control of the money spigot? What do you think is the best way for governments to embrace the new digital economy while not stifling innovation?
There's two questions there, right? The first is the role of governments if they don't control the money purse, and the second is basically how do you embrace the digital economy. So probably let's look at the first one. Short reality is when the governments don't have money over control over being able to print money, they will have less sources of funding. The reality is the power of the nation state is going to be limited by the adoption of Bitcoin and Decred and other cryptocurrencies, because these are essentially contrarian investments in many ways to the power of the nation state. If the nation state can't issue like a bond, if Bitcoin and Decred are like a competitor to bonds, like government bonds in particular, then you can think of the fact that a government which is using bonds as a means to satisfy its social obligation, we're likely going to see austerity needs. Governments will have a harder time trying to tax cryptocurrencies which have privacy and encryption built in. So the power of the nation state is going to be severely challenged by the rise and the adoption of cryptocurrencies. We're likely going to see some very tough decisions around social programs. And that's a real reality and a byproduct of the adoption of the cryptocurrency space. In terms of the second question about how do you embrace the digital economy, it's a great policy question. I think probably immigration as a means of attracting smart talent would be really important, because you need people to actually not just create like financial engineering of assets like derivatives and things like that, but you need people to create you need the smartest minds to come and actually create brand new jobs, brand new platforms. Immigration as a differentiator. There are ways that you can attract the smartest people in the world, which will actually create a moat for you that is going to be needed, because you're not going to be able. This is in some ways intrinsically linked to the power of the monetary purse. Governments won't be able to just inflate monetary assets, so they're actually going to need people who actually create brand new value propositions. And in my opinion, the right type of regulation, not crazy regulation, and actually the right type of immigration policies which attracts the best and brightest minds are the two combinations that you would need to thrive in a digital economy.
This is the last question from Dr. Bitcoin, and then we have two more questions from the audience. He asked, do you think the banking system will be marginalized, i.e. not necessary in our lifetime? If so, how long of a time horizon are you looking at?
Oh wow. So yeah. So first is basically a question about whether we the impact of the sort of the need for banks and money service providers as we know it, as a result of the proliferation of Bitcoin and other assets. But yes, it's true. In fact, much like the proliferation of like Instagram and social media killed off the need to have like Kodak, we're going to see similar themes play out in the financial space as well. The advent of cryptocurrencies, which are essentially a threat to banks' saving systems. When you think of the need for like a savings account, when you think of the need for like a government issued bond, when you think of the need for a GIC, a treasury bill, all of these instruments are basically like stores of values which help you preserve your wealth against inflation. All of those assets are likely to be absorbed by new stores of values which are supranational, things which are digital in nature. So areas like Bitcoin and Decred will absorb large portions of the value proposition that banks and financial service providers offered. The other thing that you also see is people who were providing services for foreign exchange, for example, that like Western Union and others, those folks are go highly short on them, right? So
The first to go.
you're first to go, right? So you got that. So what people also see is payments revenue for banks and money service providers, and in general the cost of money transmission as that collapses essentially to zero. The payments and FX revenue, that is going to collapse. So in some ways, open source free digital money that that erodes the value proposition for people who were providing stores of value assets and extracting money to transmit money. So yes, the need for a lot of money service providers is going to be reduced. So I work at a bank in my day job. So I'll actually say, the need, actually the services that banks provide will actually evolve as well. So the pure brick and mortar, having a branch corner, a bank branch at the corner of a street, that's not going to be the way you provide value anymore. It'll be more like you can provide insights, you can provide advice around your spending. You're actually going to see software just like which provides like real-time insights. Should I buy this? Should I buy something else? Those type of personalized insights are going to be like the new paradigm, where people can actually provide real actual advice as opposed to charging you money just to store your money and to move your money.
Yeah.
In terms of horizons, let's take a look at like the rise of CBDCs, central bank digital currencies. That will happen in the next, let's say, by 2025. We know from a timelines perspective, the IMF and other sort of like intergovernmental agencies are going to have like compatible CBDCs, which means then that governments can directly interact with their own clients in some ways, like interact with their own citizens. So it's probably worthwhile to pause and explain this one some more, because this is a re-architecture of the financial system. Up until now, the way money was distributed in an economy was your central banks print the money. They have current account relationships with commercial banks, and the commercial banks have relationships with people and businesses. So with the advent of CBDCs, central bank digital currencies, governments will have the ability to say, I don't necessarily need these middle providers anymore. If I were to provide stimulus, I could provide stimulus direct payments to people's. You could airdrop stimulus, for example, if you wanted to. So that changes the need for the middlemen that actually were providing a valuable service over the last century. So that will probably be a great re-architecture. The second, so first is basically digitization as a theme is going to erode the need for various people. Then denationalization of money will further erode the need for money transmitters, money service providers. So I think Anthony Pompliano, he has a term, right? Like long Bitcoin, short the bankers is basically his term. So it's going to be some variation of that does play out.
I couldn't agree more with everything you said. Especially liked what you said about sort of like the services that banks will have to maybe sort of reconstruct what they do, their value proposition. This question comes from Decred Has It All at Decred DCR on Twitter. And he has a link associated with the question. I'll just go ahead and ask the question, though. How concerning is it that Bitcoin and most POW protocols are heavily have heavily centralized mining pools? What is the worst outcome that could lead to, and what are the potential solutions?
Yeah, it is. It's a real concern. So specifically, the real concern there is, if you centralize in proof of work assets, basically, if you can control the majority of the electricity, then you have like 51%. If you have 51% power over the network, then you can essentially choose which transactions you want to approve or not. So it creates a vector of centralization. So for Bitcoin in particular, a lot of people may or may not realize this. 5 entities in the world control, I think they're based out of China, all 5, control like 49% of sort of the Bitcoin mining. So like those 5 pools are like Ant Pool is probably the famous one. BTC.com is another famous mining pool. So 49% of Bitcoin is basically, centralized in terms of mining from 5 pools. That is concerning because, what's stopping these 5 entities to like merge into like one entity in the future? In my opinion, it's one of the reasons also why the hybrid proof of stake model that Decred has, which is actually quite interesting because you're not just only relying on people who have the capex at actually mining equipment. You actually give power to the people who are stakers as well, people who are actually holding money as well. So I think that just that hybrid protocol, one of the best ways. It's not just the double spending mechanism, but it's also the decentralization that it provides. Is actually a phenomenal and very elegant solution.
Yeah, it also just reminds me of what Permeable Nino talks about with like the assurances theory of money he talks about, and it's like I just rest so much better at night knowing as a stakeholder of Decred that like, okay, well, sure we could have those same sort of issues arise, but ultimately the stakeholders are the ones who are going to have the final say, and we can on the fly make governance changes to fix those issues if they arise.
For sure. Shout out to Permeable Nino and Jody.
Shout out.
The one more thing I'd probably say is the halving is so there's real thought there about like the long-term implications of like Bitcoin halvings. Up until now, it's phenomenal from a marketing perspective. Supply gets cut in half, demand grows up, and we go into a bull run. But longer term, if the miner rewards in a pure POW model, if they continue to be reduced in a pure POW model, once you've reached below a certain threshold, if you don't have the right incentives for people to mine, who's doing the mining? Why are they doing the mining? Is it only certain more centralized institutions and entities and mining pools that will do the mining? That is a byproduct of having a pure POW model that is a risk, in my opinion.
That is a perfect segue into our last question, and we'll wrap it up with this one. The question comes from Eli Herf. He says, "It's at Eli Herf 1 on Twitter." He asks, "It's the year 2040, and the last Decred block has been mined. What next?"
Hey, Ali. So it was 2140. I assume he meant 2040 is in like, I guess.
I was wondering. I was like, man, it's happening in my lifetime. Okay, 2140 is probably what he meant. Yes,
that's right. The good thing. So I think first of all, it's probably worthwhile to say, forecasting 100 years out, we're probably firmly in conjecture territory. However, we can make educational insights and actually trends. You could probably have a good discussion as to what would happen. The hybrid proof of stake and proof of work model is, I think, a key asset there at that point. So if you have a finite supply asset, once you've exhausted the full supply and there's no more miner rewards, what do you do? In my opinion, there's one particular scenario where you have a governance ability to actually say, fine, you remove the need to have like a proof of work reward, and you can actually rely purely on proof of stake returns, and you can still use particularly Decred's proof of stake mechanism as a means to reward people, because proof of stake, there's two reasons why people to use proof of stake, right? One is to get like yield from like a additional supply. The second is actually governance rights. So over the long term, once the full supply has been exhausted, you don't necessarily have to provide that yield from a supply increase anymore. You could incentivize people using a voice. The value of that one particular vote, the staking reward there would actually become quite interesting. So if you were to draw it out on a chart, the reason for why proof of stake becomes important for Decred, kind of over the long term, is in the beginning it's more about yield, and over time, as the yield reward goes down, and a parallel, you'll see a graph where you'll have the power of governance vote actually go up. And the reasons for staking will actually be more around having a voice in the Decred ecosystem, as opposed to having a yield which relies on an inflationary system. So which is a really elegant way of saying, over time, if you run out of a way to incentivize a miner, and if you had to switch over at that point, assuming the market cap is really, really high at that point, like 100 years from now, you could incentivize and have a governance means to switch over into a proof of stake model. And you could do so without needing to have perpetual inflation. You could do so, you can incentivize people to do proof of stake by rewarding people with the voice. And, the staking for Decred in particular has already got a product market fit. DCR, just the value of DCR, more than half of the actual circulating supply, it's actually staked by people. So we've actually seen a good product market fit there already. And over time, the need, to have a voice in the ecosystem, as the value of the treasury grows, as the value and the applications for DCR grow, staking and actually giving a voice there becomes more important than an inflationary reward.
Ammar, your insights throughout this interview have been tremendously valuable to me. Your clarity of thinking, I don't even know, like just your analysis, and it's all much above myself. And I'm very thankful that you took time to come and talk to me and to my audience. Is there anything that I didn't ask that I should have? I'll go ahead and everyone probably already knows, but it's Ammar Uni on Twitter, and obviously I'll have that tagged in the description. But is there anything you'd like to say to the Degens, Chads, Dorks, and Stacys out there?
No, thanks for the opportunity. I enjoyed the chat also, Eduardo. I'm appreciating. I always love when you're starting a new podcast. I think educating people is one of the best things that you could do in this particular space. When people come into this space, the single biggest reason why people stick is because they have the right education assets. Education assets are the key to the rabbit hole. It's the key reason why people like Michael Saylor, Paul Tudor Jones, the biggest investors, have actually stuck to Bitcoin. To the Decred community, what I'd say is, we're excited to have great assets like with Decred, DCR on chain, Check on chain, new podcasts like your podcasts like Rough Consensus, podcasts like Decred In Depth, all of these, as well as the various research papers that are being published. I would say, if our listeners and watchers who are watching this, if you have thoughts, feel free to reach out to myself, any of the community. It's a very, very inclusive community. Feel free to actually ask any question. There's no bad questions. There are frequent, ask us anything type, Reddit meetups or questions that are hosted by the community. So please feel free to reach out. The best thing that you could do is, just ask people if you're not sure about anything. And actually, one of the best things that you could do to distill your thought is just write and actually get feedback. The community will tell you right away, are you on the right track? There's no wrong answers. We're all a bunch of Chads here. We're all a bunch of Degens here. So when we're all looking to learn from each other. Probably the final thing I'd leave you with is to say, in terms of use cases, the way I see it, Decred is decentralized money. Bitcoin is decentralized money. Ethereum is decentralized infrastructure for dApps, and Decred is decentralized infrastructure for DAOs. If you are bullish on DAOs, look into this concept. I'm personally excited about this concept the most over the next decade. The 2010s were the rise of decentralized money. The 2020s will result in the rise of decentralized autonomous organizations. Read up into it. I'm very excited about it. Reach out to myself as well. And again, Eduardo, thanks for the opportunity and good luck on this podcast.
Thank you, Ammar.